This week, the stock market took a wild ride, with dramatic highs and lows that left investors and analysts scrambling to make sense of it all. It was a week where fortunes were made and lost in the blink of an eye, and the catalyst for this chaos? A single tweet. It all started with an announcement that sent shockwaves through the financial world. Social media once again proved its power to influence not just public opinion, but also global markets. The announcement in question came from none other than Donald Trump. Donald Trump, never one to shy away from bold and often controversial statements, took to social media to declare in all caps, "This is a great time to buy." The timing of this announcement was curious to say the least, as it came amidst a sharp market downturn. Was it a rallying cry to calm panicked investors, or was there something more strategic at play? Just hours after the announcement, Trump made another headline-grabbing move. He announced a surprise pause on certain tariffs, a decision that seemed to come out of nowhere. This unexpected announcement added fuel to the fire, leaving many to wonder if it was a calculated attempt to stabilize the markets or simply a coincidence. The market, as if taking its cue from the president, staged a massive rebound. Stocks surged, and the financial world breathed a collective sigh of relief. But the rapid recovery raised questions. Was this a natural market correction, or was it influenced by insider knowledge? The timing of these events didn't go unnoticed. Across the political spectrum, eyebrows were raised and skepticism grew. Was this a genuine effort to protect the economy, or was there a more self-serving agenda at play? Critics were quick to voice their concerns. Democrats, in particular, were quick to smell a rat. They questioned the timing and motives behind the president's actions. Was it all just a coincidence, or was there a deliberate attempt to manipulate the markets for personal or political gain? And then came the most damning question of all. Did someone, perhaps with a little presidential tip-off, make a killing off the market's roller coaster ride? The possibility of insider trading loomed large, casting a shadow over the week's events. As investigations begin, one thing is clear: this was no ordinary week on Wall Street. Led by Senator Elizabeth Warren, a figure known for her relentless pursuit of accountability in financial and political systems, the call for an investigation into potential insider trading has gained significant traction. Warren, a staunch advocate for economic fairness, has long been a vocal critic of policies that she believes prioritize the wealthy elite over everyday Americans. We urge the SEC to investigate whether the tariff announcements, which caused the market crash and subsequent partial recovery, enriched administration insiders and friends at the expense of the American public, and whether any insiders, including the president's family, had prior knowledge of the tariff pause that they abused to make stock trades ahead of the president's announcement, said the letter, led by the Massachusetts senator and former presidential candidate Elizabeth Warren. Early on Wednesday, Trump announced on social media, "This is a great time to buy." The post was written at a time of severely volatile market trends and U.S. indices down. Hours after his post, the U.S. president abruptly announced a 90-day pause on many tariffs. The move sent the U.S.'s S&P 500 back up several percentage points in just minutes. Wednesday ended up marking the best day for the S&P 500 since the recovery from the 2008 financial crisis. The letter was also signed by the Senate Minority Leader Chuck Schumer, Finance Committee Ranking Member Ron Wyden, the Arizona Senators Mark Kelly and Ruben Gallego, and California's Adam Schiff. The senators accused Trump of announcing a series of erratic, reckless tariffs leading to significant market turmoil, adding, "As a direct result of this chaos, the U.S. financial markets have experienced dramatic declines over the course of just a few days." The letter adds, "It is unclear which officials and affiliates of President Trump had advanced knowledge of his plans to delay tariffs, but insiders may have known that he was going to announce a tariff pause and that the market would improve." The senators also questioned the Trump administration's actions to undercut the SEC, asking what effects the recent actions and federal staff cuts had on the agency's ability to investigate and pursue enforcement actions as well as monitor and respond to large-scale market events. Her criticism of Trump's economic policies, particularly his unpredictable tariff announcements, has been a recurring theme in her speeches and public appearances. These policies, she argues, have not only destabilized markets, but also created opportunities for those with insider knowledge to profit unfairly. In a decisive move, a group of prominent Democratic senators joined forces to address these concerns. They penned a detailed letter to the Securities and Exchange Commission, or SEC, urging the regulatory body to investigate whether Trump's actions were exploited for financial gain. The letter emphasized the need for transparency and accountability in the face of such allegations. The demand for a full-blown investigation centers on the timing of Trump's market-moving announcements, which often seemed suspiciously aligned with significant stock market activity. The senators questioned whether these moves were coincidental or part of a larger pattern of insider trading that undermines public trust in the financial system. Senators Chuck Schumer, Ron Wyden, Mark Kelly, Ruben Gallego, and Adam Schiff lent their voices to this effort, adding their signatures to the letter. Their involvement underscores the seriousness of the issue and the collective determination of Democratic leaders to hold those in power accountable for their actions. The letter also highlighted the broader implications of Trump's erratic tariff policies. By creating an environment of uncertainty, these policies not only disrupted global trade but also opened the door for potential exploitation by those with insider knowledge. The senators argued that such actions, if left unchecked, could erode public confidence in both the markets and the government. The call for an SEC investigation is not just about uncovering potential wrongdoing, it is also about restoring faith in the systems that govern the economy. For Warren and her colleagues, this is a fight for fairness, transparency, and the integrity of the financial markets that impact millions of Americans. Senator Warren, a former Harvard law professor specializing in bankruptcy and financial regulation, is no stranger to taking on Wall Street and holding powerful figures accountable. She has been a consistent voice for strengthening financial regulations and protecting consumers from predatory lending practices. Warren's involvement in this latest scandal brings a sense of urgency and expertise to the table. Her presence reassures many Americans who feel that the system is rigged against them. So, what exactly is insider trading and why should you care? Imagine this. You're at a poker table and another player gets to peek at everyone else's cards before placing their bet. That's essentially what insider trading is. It's illegal because it gives an unfair advantage to those with access to non-public information. When someone profits from this kind of insider knowledge, it undermines the integrity of the entire market. Section 5. Market manipulation when the game is rigged from the top. This is a story about power, influence, and the unsettling ways in which the financial world can be manipulated from the highest levels. It's a tale that goes beyond the numbers on a screen or the trades on a floor. It's about the very fabric of trust that holds the market together. The Democrats' concerns extend beyond simple insider trading. Insider trading, while damaging, is just the tip of the iceberg. Beneath the surface lies a much larger issue, one that threatens the integrity of the entire system. It's about how those in power can shape the market to their advantage, leaving ordinary investors at a disadvantage. They're worried about something even more insidious: market manipulation. This isn't just about a few bad actors bending the rules. It's about systemic issues, where the rules themselves can be rewritten or ignored by those with enough influence. It's a game where the deck is stacked and the players at the top hold all the cards. Imagine for a moment a world where the president could tweet about stocks and send the market soaring or crashing at will. A single statement, a single action could ripple through the economy, affecting millions of lives. This isn't just a hypothetical scenario, it's a reality we've seen glimpses of in recent years. That's a terrifying thought, isn't it? The idea that the market, which so many rely on for their savings, their retirements, and their futures, could be so easily swayed. It raises questions about fairness, accountability, and the very purpose of the financial system. It would mean that the stock market, instead of reflecting the actual value of companies, would become nothing more than a plaything for the powerful, a tool for those at the top to consolidate their wealth and influence, while the rest are left to deal with the fallout. This is the danger of market manipulation, a danger that threatens not just the economy, but the very principles of fairness and equality. You might be thinking, I'm not a Wall Street tycoon, so why should I care about any of this? Well, here's why. When people lose faith in the fairness of the market, everyone suffers. Retirement accounts dwindle, businesses struggle to raise capital, and the economy, well, it sputters. Trust, once broken, is incredibly difficult to rebuild. So, who's there to police the market and make sure everyone plays by the rules? That's where the SEC comes in. Think of them as the referees of the financial world, blowing the whistle on illegal activity and penalizing those who break the rules. Their job is to protect investors, maintain fair and orderly markets, and facilitate capital formation. Without a strong and independent SEC, the market would descend into chaos. Remember the 2008 financial crisis? That was a painful reminder of what happens when financial regulations are weak and oversight is, well, lax. Millions lost their homes, their jobs, and even their life savings. The Democrats' call for an SEC investigation is about more than just this one incident. It's about preventing history from repeating itself. It's about ensuring that the rules are enforced and that those in power are held accountable. The outcome of this investigation remains to be seen. Will the SEC uncover wrongdoing? Will anyone be held responsible? Only time will tell. What's important now is that we, the public, demand answers. We need to send a clear message that no one, not even the president, is above the law. The integrity of our markets, and indeed our democracy, depends on it.